We're here again at the start of September with John Woolfitt, Director at multi-award-winning broking and investment firm Atlantic Capital Markets. John, it's good to catch up again.
Good to catch up, Alan. Thank you.
So at the end of August, Fed boss Jerome Powell indicated that the administration was prepared to ride with higher inflation around 2%. The markets seem to translate this as low interest rates for years to come. How do you read the Fed's strategy playing out in the markets for your dealing team?
Yeah, so I mean, what the Fed's highlighting is really they're running out of toys to play with here. Interest rates are close to zero. QE printing's continuing. They've now been forced to look at additional measures as well. So, I mean, after decades of central banks being really super averse to inflation, the Fed has recently announced a U-turn and now targeting inflation over 2%, as long as the average inflation rate ends up at around the 2%. It really does highlight to us how we just continue to operate in uncharted territory, and almost anything appears to be on the table, really, for the Fed at this point.
The market, you're right. I mean, the markets do seem incredibly resilient at the moment in the face of all this economic havoc and, of course, this ongoing battle with coronavirus. And we're also seeing, aside from the obvious COVID stocks that have risen over the period, we're seeing a lot of strength in mining and commodity stocks at the moment. Do you think this is sustainable?
Yeah, I mean, the factors that are impacting it are still there. Monetary easing, these measures globally will gradually devalue the fiat currency. Commodities and precious metals will continue to rise in value as investors are really driven to the sector to find returns. Also, to a degree, hedging against the inflation we expect ahead as part of the Fed measures. I mean, mining stocks have also benefited from the recovery signs in China, copper trending strongly, and equally a phenomenal rally in the gold and silver. I mean, this has been great for us. We're trend followers by default, if you like, and this is translated into great trends in sentiment, Egypt, polymetal, Fresnillo, and obviously Antofagasta from the back of it, really. Yes,
of course, and we're seeing a lot of interest in the junior mining sector too. We're seeing a lot of the junior mining stocks with projects that probably hitherto were considered uneconomical to develop and bring out of the ground. Of course, with the commodity prices, particularly the gold price pushing over 2,000, it's changed that scenario completely.
Yeah, absolutely. I mean, if you'll pardon the pun, it is a golden time to be invested in the lower tier gold miners. Absolutely.
Yeah. So moving back to stocks, or moving on with stocks as well. In regard to the research notes that Atlantic published during August, you published research notes for BP, for Admiral Insurance, and of course Rolls-Royce and others. Clearly, you're seeing a way forward for travel, leisure, and so on. Has your view changed much since the start of September?
Yeah, I mean, clearly the markets have dragged along the lows, and it seems as if we've continued on at that level. But eventually, the workforce will have to go back to rescue the economy. We are starting to travel again, granted, from one day to the next, it seems like we can go some places and not the other. But I think once the apps, the testing is really properly in place, then we will start to get back to normal. Short-term moves still create a challenge. Long-term remains robust.
Good. Okay. So for Atlantic clients and viewers looking for trading ideas, what strategies and ideas have you got for this month, given what we just heard from the Fed?
I think you've got to maintain a hedge on your accounts, whether it be shorting the weakness or simply, maintaining the long gold or long gold miners. Be mindful of announcements coming up. There's a lot going on figures-wise. Halfords, Meggitt, JD Sports, Travis Perkins, Tullow Oil. Will be interesting to see how the oil price is weighed on them. And of course, Costain. However, fair warning with regards to figures. Personally, I'll never try to buy ahead of the numbers. For me, it's a bit of a blind punt and not what Atlantic are about at all. I prefer and I would always encourage clients to look at how the market responds after the announcements, have a clear vision of the road ahead. Believe me, cheap isn't always good, especially when it comes to the stock market. One thing that I will always say to all my clients, and indeed to all my staff, boring profits are better than exciting losses.
Absolutely. Sound advice there, John. Sound advice. So talking about advice and ideas, of course, you're in charge of a team of experienced brokers on the dealing floor there, and you must hear ideas from them as you go forward, innovative trading ideas and strategies. Can you sort of provide us with some of these ideas?
Yeah, well, as mentioned before, maintaining a hedge is critical. I've touched on Halfords results are coming ahead. Now, when we're looking at certain stocks, we do like to create our hedge position. So, for instance, you may well be short in something like Halfords or short WH Smiths versus a long position in Amazon. There may be near-term volatility, but over the mid-term, you would remain confident that Amazon will, say, outperform Halfords or WH Smiths. So a key theme is really playing the strong against the weak. You know, in this climate, the strong get stronger and the weak get weaker. So don't, and that's again what I mentioned before, cheap isn't good. If something's falling through the floor, doesn't mean it's time to buy, quite the opposite.
Sure. Okay, John, well, we're running short on time. So before we go, can you provide viewers with some key takeaway ideas and stocks perhaps to look at for September?
Yeah, I mean, there's a lot of results coming into play, as we touched on, but I think, one thing I would always say be mindful of is the ever-changing backdrop. It is critical in these sort of times in these markets for investors to have access to real-time data. This really plays back to something that we offer all our clients. All our clients get the real-time text alerts. These aren't alerts created by robots or algorithms. They're real-world analysts responding to real-time moves and news. And we've also noticed a lot of our clients taking short-term positions recently. So we are, advertising a free trial on the alert so people can get a feel. But also as well, there is this air of increasingly nervous view towards the wider market. And so again, we've responded to these concerns by making sure that our clients have the ability to maintain hedging on long and short. And that would be my advice to all investors, traders out there. Don't get caught. The old saying is, when the tide goes out, you get to see who's swimming without the shorts on. Well, if the tide goes out, make sure you've got some shorts on your account, really.
Indeed. That's obviously particularly relevant for Atlantic capital markets, being close to the coast there in the southwest.
It's certainly no explanation of what I do on my spare time, Alan, that's for sure. Yes, you're absolutely right.
Okay. All right. Well, John, it's been great catching up with you again. Let's catch up again at the start of October, see where the markets are and see what ideas you have in store for October.
Great stuff, Alan. It's a pleasure. Speak to you then.